Good evening. Tonight we're going to address the question, should you go to a tax preparer? A lot of people have come to me and they said, well, why do I need a tax preparer? I could just do my own taxes. I could buy a program like TurboTax or TaxCut or H&R Block online and I can just do my own tax return. And in some cases, people's returns are simple and they do. But today, the tax laws have gotten more complicated and they also keep changing it. So, there are many reasons why you would now want to use a preparer as opposed to trying to do the return yourself. Now, if you deal with taxes every day, that might be one thing. If you're very familiar with the tax law and you know everything that's going on and you work with taxes on a day-by-day basis, then, yeah, you might want to do your own return. But if taxes are something that you just occasionally read about but you don't really work with them, you're better off having a professional take care of it. And tonight I'm going to give you some examples and go into some of the reasons why it's good to seek professional advice when getting your taxes prepared. So the first thing has to do with the documents that you use to prepare your tax return. One of the things that can happen is that when you go to get your taxes done, or when you go to do your own taxes, you might be missing some documents, and you might not even be aware of it. For example, a client came in to me, and they wanted their taxes done, and it was a scenario like this. They had moved from Texas to Georgia. So in the course of working on their taxes, I asked them, I said, did you have a house in Texas and did you have a house in Georgia? And they said yes. They had sold a house in Texas, they moved to Georgia, and then they purchased a house in Georgia. And then I asked them, well, did you just have a first mortgage or did you have a first mortgage and a second mortgage? Well, they told me that they had a first and a second mortgage on the house in Texas, and they also had a first and a second mortgage on the house in Georgia. Well, when I was looking at the documents they gave me, there were only two mortgage documents. So then upon delving into the matter further with them, I found out that they didn't bring me everything. Well, they wouldn't have known that. Had they done their own taxes, they would have left off some valuable mortgage deductions because they had only had two documents, and based on the questions I asked them, I determined that they should have had four. So if you're going to do your own taxes, you got to make sure that you have everything, but a lot of people aren't aware of what they're supposed to have, so they're not aware of when they're missing something. Another example was that a client came in to me and he had purchased a house. Let's say it was 2006 and we were working on 2005 taxes. He had purchased his house in September of 2004 and we were working on his 2005 tax return, and his wife had gotten all the tax information together for him. Well, guess what? When it came to the mortgage statement, she accidentally put the 2004 mortgage statement in with their 2005 documents. Well, I was able to realize that because I looked at the mortgage interest and it didn't seem high enough to me. It only seemed about a third of what it should be based on the mortgage balance that they had and the interest rate that was being charged. I calculated the mortgage interest should have been about $12,000. The mortgage statement said $3,943. So I had the husband call his wife, and sure enough, the wife had put the wrong mortgage statement in with their documents. When she looked at the 2005 mortgage statement, the mortgage interest on there was $12,138. So in that case, had they done their own taxes, they would have been short about $8,000 on their mortgage interest deduction. And based on their tax bracket, they were in the 25% bracket. The husband was a professional. They would have shortchanged themselves about $2,000. So in order to save $100 or $200 or $300 in tax preparation fees, they would have lost $2,000 worth of refund. And that's only on the federal return. They would have lost a few hundred on their state return as well. But the point I'm trying to make is they were not familiar enough to know what was going on, so it wouldn't have been a good idea for them to do their own tax return. Now, there are some other reasons why you might want to use a tax preparer as well. Another example is, let's say I've done somebody's taxes, and then a year later they call me up and they go, John, I'm refinancing my house, or I'm going for a mortgage, and they want my last year tax returns. I can't find them. Can you send a copy to the mortgage company? And of course, I have them on my computer, so it was easy enough. I was able to print a copy out and fax it to the mortgage company or email it right to them. Now, had the client done their own tax return, they probably would have lost it. They would have had a problem. They wouldn't have had a copy to give the mortgage company. They would have had to find some way to recreate the return or go to the IRS, and it could have taken several weeks for them to get the information, whereas they were just able to call me, and within the same day they had that information over to the mortgage company. Another thing that happens is a lot of people do their taxes on hand or with an off-the-shelf computer program that they can pick up at the store. Well, first of all, when the returns are done by hand, often the taxpayers make calculation errors. So there's mistakes in the return, and they go in wrong, and the return ends up being corrected, and in some cases, they may actually leave some deductions off, like I mentioned before. And then the other thing is sometimes they'll use one of these off-the-shelf computer programs, and they'll use an interview method. And sometimes they ask questions, and the client's not really sure of the answer. Some of the questions could be very vague or ambiguous, and the client may not answer the question right. I've seen clients come into me with returns they prepared where they either left off their mortgage interest or they doubled up on it because they didn't answer the questions right, and the program took the taxes and the mortgage interest twice. So sometimes the returns can be prepared incorrectly on these programs because the person who's working them isn't familiar enough to prepare the return correctly. The other thing is a tax preparer will ask you questions. They'll ask you about all the possible deductions you may have and all the documents that you need to prepare a complete and accurate return. Sometimes if you're relying on the computer to do your taxes, that could be dangerous. I mean, if you know what's going on and the computer's just doing the crunching, the crunch work and the detail work, then it's okay. But if you're relying on the computer to do your tax return for you and you have no clue as to what's going on, that's not a good situation. In that case, you should really have a professional do it for you. Okay. Another thing is if you have a complicated situation. Let's say you have a house, you have children, your return's going to be beyond the basic return. It's a good idea to have somebody prepare it who's familiar with preparing tax returns. Also, if you have a business, that's going to be a lot more complicated than if you just have one W-2. Or if you had relocated and you have multiple state returns that you need to do, that could be pretty complicated doing the state return. So for that reason alone, it would be good to go to a tax preparer and have them figure out what goes with which state. All right, now here's another example. There are sometimes things that you may be able to do that you may not be aware of. Let me show you an example here. Here's an example of, figure this is a single parent with one child, and here is their tax return. And the mother made, let's say she made $25,400. And here's her typical return. And as you can see on page 2, she had put some money into a 401k plan. And what happens is when you are a low income earner and you put money into your retirement plan, not only do you get a tax deduction, but you also get a tax credit in addition to that. So if you can see here, she got a $400 tax credit in addition to the tax deduction for putting the money in the 401k. And basically the rule is that at her income level, she's allowed 20% of the first $2,000 that she puts in. And here's the Form 8880 where you figure out what the credit was. Now, you can see there's a chart here, and the credit ranges from 10% to 50% depending on how low your income is. Well, her income was $25,400, and you could see based on the table here, somebody who makes $25,125 to $27,000 and a head of household is entitled to a 20% credit. But if the person made $25,125 or under, they'd be entitled to a 50% credit. This person was only a couple of $100 away from being in the income range where she could get 50% credit on that 401k instead of a 20% credit. So what I advised this client to do was to take an IRA for $300. Now here's the return with the IRA deduction, and you can see the IRA deduction reduced her adjusted gross income from 25.4 down to 25.1. Well, guess what? Because of that $300 that she took, she's now entitled to a 50% tax credit on that $2,000 that she put in her 401k instead of a 20% credit. So now she gets a credit of $1,000 instead of $400. So by putting away that $300 in her IRA, she was able to save over $600 on her taxes. Now that's a situation that a taxpayer would probably not be aware of had they tried to do their own return. You need a tax professional who knows what's going on to be able to point out a special opportunity like that when it becomes available. So for all the reasons I mentioned, it's good to seek professional advice when preparing your taxes to make sure that you don't miss out on a good opportunity if it's there. And make sure that whoever you choose for your tax preparer, I recommend a CPA or somebody who is very good at what they do and who knows the tax code very well and who knows how to prepare the returns accurately. Well, thank you very much for watching, and I will see you in my next video.